Hi, Doug Goldstein here with Profile Investments. The topic for today is donating appreciated stock. Now, why is this such an important topic? Because recently in Israel, some laws have changed which have made it really a great opportunity for people who are charitably inclined to donate money that is invested in the stock market and that has gone up in value. So that's the topic for today, how you can really unlock the value of your charitable donations and make them much more valuable and more tax savings for you as well. Before we start, I just want to dive in and share a little story with you that I think illustrates a very important point. It's about a photojournalist. So there's a story about a photojournalist who's told to take a photograph of a forest fire. So he goes to the forest fire, and it turns out that it's so huge that he's not able to get a good angle on it. So he calls his editor and he says, "Listen, I need an airplane so I can get a good angle on the forest fire." The editor says, "No problem. Get to the airport and the plane will be there." So he races over to the airport. He sees a plane at the end of the runway. He jumps in. He turns to the pilot. He says, "Go, go, go. Take off." So the pilot turns onto the runway and zooms down the runway, takes off into the air. And the photojournalist says, "I want you to go to that forest fire and circle around the forest." And the pilot turns to him and he says, "Well, why would I do that?" And the photojournalist says to him, "Because I'm a photojournalist. I need to take a photograph of it." And the pilot looks at him and he says, "Do you mean to tell me that you are not my instructor?" So I like this story, and I think it's a good joke, and I think it has a good moral for what we're talking about here today, which is it's very important before you dive into this model of donating appreciated stock from your portfolio to know exactly what the steps are that you're doing. And the way to get started with that is to take a close look at what you've got on your statement. If you're an experienced stock investor and you're very used to dealing with your portfolio, so what I'm about to tell you may seem very elementary, but the fact is, as an investment advisor dealing with people who live in Israel who have U.S. investment portfolios, I hate to say it, but a lot of them don't have a lot of experience in really understanding what's going on in their portfolio. So the first thing that you need to do when you've decided to donate money in terms of donating a stock portfolio or a one stock in your portfolio is to choose the candidates that are the most useful in terms of getting the most bang for your buck. How do you choose which stocks are the best candidates to donate? Now, the main thing, which we'll dive into a little bit later, is that you need to understand that when you're donating appreciated stock, that means that you own a position in your portfolio, it's gone up in value, and if you were to sell it today, you'd have to pay a large capital gains tax. So what we're looking for is a way to avoid paying that capital gains tax and at the same time get a tax credit in Israel for the value of the donation you're giving. Before we go any further, let me remind you, I deal with investments. In America, I'm licensed as an investment advisor. In Israel, also I'm licensed as an investment professional, but I don't give tax advice. So it's important that whatever you're going to learn today and whatever I mention about taxes should be just taken with a grain of salt and something you should go speak to your accountant about. And if you need help, then you can, of course, ask us to speak with your accountant to review your portfolio at the same time. So in evaluating which positions are the best ones to give away, the first thing that a lot of people do is they look at their statement and they see, how has this position done over time? Basically, the question is, do I have something in my taxable brokerage account? I'm saying taxable brokerage account because we're not talking about IRAs at this point. Only brokerage accounts where you have positions that if you were to sell them, you would have to pay tax on it. So you ask yourself the question, is there anything in my portfolio that I would have to pay tax on? So how do you find out? Well, actually look through the portfolios, look at the basic positions, and normally you'll see on your statement there's going to be a column that says cost basis, and it'll say, okay, you have such and such a position, you paid $80,000 for it, and then it says market value. So today maybe it's worth $100,000. So if you paid $80,000 and today it's worth $100,000, you have a capital gain of $20,000. Now that position might be a good candidate for us. Look at every position you have in the portfolio and see which ones have the biggest embedded capital gains. Embedded capital gains, by that I mean that they've gone up in value, but you have not yet sold them. So another term that you might see on your statement is it may say unrealized capital gain. Unrealized, again, means you've bought it, but you haven't sold it, but there is a capital gain. There's a profit in that position that if you were to sell it, it would be taxable. So you're going to look at what happened in the past. Now, don't forget, what guys like me always tell people is past performance is no guarantee of future returns. Now, there is a reason that we say that, and that's specifically that past performance really is no guarantee of future returns. I tell this to people all the time. We look at possible investments, and then at the end of the day, frequently they just go down the list and they look at what the past performance was, and they look at the one that has the greatest past performance, and they say, oh, that's the one that I want to invest in. And I say, but didn't you hear me tell you past performance is no guarantee of future returns? You know, people who don't really believe that or accept that, these are the kind of people who go to the cafe every morning, they get a fresh baked croissant, and they say, oh, it's nice and warm, and they think that's going to happen all the time, and then one day they get very disappointed when the only thing that's available is a day-old donut. So just because something happened before, it doesn't mean it's going to happen again. But the first thing you do need to look at in deciding what positions you may or may not want to donate from your portfolio are look at the ones that actually have a gain. Now, let's dive in a little bit further. Let's talk about what your strategy is. Now, a very common strategy that people have when they invest is what we call the core satellite. The core satellite, which basically, as you can imagine, the core is like the big position, and the satellite are things that go around it. So the core position, let's say for a lot of people, might be that they have the S&P 500 index fund. Not a recommendation, I'm just saying this is a common investment that people have. And let's say that it's gone up in value a lot. So good. So now all of a sudden you say, Doug, that fits the first criteria. You said I have to find positions that have gone up in value. Well, this one's gone up in value. Okay, that may be very true. But if that's the core value, if that's your core portfolio, maybe that's not the position you want to be selling. Maybe that's the position you expect to be holding for many, many years. On the other hand, maybe you have other individual stocks, something you bought a couple of years ago and you were very lucky and scored and you hit a home run and now it's gone up in value. But that is what we would consider a satellite position, something that it's not the core, but it's done very well. And maybe that's something that you're going to consider selling. So look at your overall strategy and determine which positions you might be willing to give away. Now, another factor to look at when you're looking at the positions is which position actually maybe has reached its potential. Why do we buy stocks or bonds or mutual funds or ETFs? Because we buy them, we think they're going to go up to a certain level, and then at that point maybe we're going to sell them. Not always. Some people want to hold something forever. That's often the quote that people like to say from Warren Buffett. When he was asked, Mr. Buffett, what is your ideal holding position for a stock? He says, I want to hold it forever. On the other hand, some people say, listen, I've got a position, it's gone up in value, I've made my profit, I think it's maxed out, it's hit its peak, and they want to sell. Or it's an opportunity now to give it away, and that's how we're going to save taxes. So look, again, the steps are, first, find the positions in your portfolio that have a big profit in them. Second, look at your overall strategy. Determine which positions you should be holding yourself, not giving away for the long term, and which positions don't fit into your long-term strategy anymore, and maybe you could sell them. Third, look at those positions now which have peaked and you think you could be selling. And then the next thing I want to talk about is look at the impact of giving away this stock on your overall diversification. So diversification, I believe, is a very important factor in a portfolio. That's a big part of what financial advisors often tell their clients. Listen, don't put all your eggs in one basket. In fact, probably your grandmother told you that, and she probably didn't even charge you to tell you that. But as a professional financial planner, I often tell people you have to be careful. Don't be too overweighted in any one position. That's why we want to look at, if you give away a stock or a fund or an ETF, what is going to be the impact on your overall diversification? Finally, let's talk for a minute about why you would do this. Now we're going to talk about the tax. What's the impact on your taxes? And again, not tax advice, but given the new regulations in Israel that people are taking advantage of. By the way, these regulations have been around in America for a long time, so you may be very familiar with it. There's really two different tax benefits you're getting from donating appreciated stock. The first one is that, let's say the example I gave earlier is if you bought something for $80,000 and now it's worth $100,000, if you give that position away, you're not selling it, right? You're literally going to give it to the charity. The charity is going to sell it, and most likely, if they sell it right away, they're not going to have to pay any tax on this position. So if you give it away, you're never selling it because you're giving it away. It literally leaves your portfolio. It's not going to show up on your year-end tax 1099 that you'll get from your U.S. brokerage firm as a sale because it's not being sold. It just disappears. It doesn't really disappear. It leaves your portfolio. I guess you could say it does disappear from your portfolio. It's no longer part of your portfolio, and therefore you're not selling, and you are not going to pay tax on that $20,000 gain. Now, there's something else to be aware of. In Israel, when you give a gift of $100,000, let's say, you can get a 35% tax credit for that. Again, because we're not giving tax advice, I'm giving very general advice. Make sure you speak to your accountant, because the numbers may not fit in your situation. Maybe you own a company and you have different tax situations, or as an American citizen or a dual citizen, there might be other taxes involved. The principle here is what I want to touch on, which is there's two tax benefits. One is you're not going to have to pay that capital gains tax, which otherwise you would have to pay. And by the way, even if you figure, oh, wait till I die and then I'm going to pass it along to my kids, because I remember someone once told me that if you're an American and you die and the value of your portfolio has gone up, it resets to the date of death. And that is true for people living in America. But it's not totally true for people living in Israel, because there are different Israeli tax consequences on a portfolio like that. And it's, again, beyond the scope of our discussion today. But it's not a solution to say, oh, I'll just hold it until I die and then all the taxes go away. Getting that double tax benefit of avoiding paying the capital gains tax, and at the same time getting the 35% tax credit from the Israeli tax authorities, has a huge potential. Okay, so now we've spoken about how do you figure out what to give, why you might want to give it. Now let's talk about, from a financial planning standpoint, some of the benefits that you can actually get above and beyond just the tax benefits. So there's a story I like to tell about this woman. She had a real need to get her piano tuned. So she called the piano company and she said, can you send someone over? And they sent over Mr. Opernakity. And he came over and Opernakity tuned the piano. He worked for a couple of hours and he left. And then the lady came and she checked the piano, and it turned out it didn't sound very good. So she calls the piano company. She says, listen, you got to send that piano tuner back. He didn't do a very good job. I need Opernakity to come and tune my piano again. And the lady on the other end of the line at the piano company, she said, I'm sorry, ma'am, but Opernakity only tunes once. All right, so if you're not a Native American, you won't get that. It's a play on the phrase, opportunity only knocks once. So the fact is, when you're donating money, when you're donating appreciated stock, it's not the kind of thing you're going to do every day. It's not like you reach into your pocket every so often and hand a little tzedakah over to some guy. It's not hopefully it's not a once-in-a-lifetime event, but you may do it as often as you tune your piano. So you've got to take advantage of this now in order to properly rebalance your portfolio. This is all part of your financial plan. As a financial planner, I'm often talking to people about their overall asset allocation. What percent of your portfolio is in stocks or bonds or mutual funds? So if the stock market has gone up a lot and you originally were 50% in stocks and 50% in bonds, well, now your personal asset allocation could be very skewed. Maybe it's 60-40 or 70-30, not because you did anything, but because the market went up a lot. That's an opportunity now for you to rebalance and fix your portfolio to get back to the allocation that you want without having adverse tax consequences as a result. That's one financial planning aspect to this. Let me give you another one. You got to think about what your overall goal is in terms of financial planning, and specifically, I'm sure the reason that you're listening to this is because you are charitably inclined. So one of the things that happened to me probably over 20 years ago is I went to a lecture by Howard Jonas. Howard Jonas is probably worth hundreds and hundreds of millions of dollars. He started a company called IDT and competed head-to-head with AT&T, Ma Bell, right? Probably the most famous company at the time in America. That was pretty bold of him, and he succeeded. So he gets a lot of points for his financial acumen, but also because when I heard him speak, the one thing he said that really struck me and stuck with me is he said that he and his wife donate 20% of what they earn to charity. And I remember thinking, wow, this is great. I'd like to be like that. So I went home that day and I sat down with my wife and I said, listen, I heard this guy Howard Jonas speak. He said he gives 20% of his income to charity. Why don't we try to be like that? Now, this is many, many years ago. This was before Profile Investments was a big thing in Israel. And so it was a big deal for us to make that decision. But that became part of our financial plan. So just like you might have an asset allocation in your financial plan, you're also going to have a charitable portion that you give away, some to charity, some for retirement savings, some for an emergency fund, some to help the kids. All of these things are part and parcel of your overall plan that you need to build in and think about in advance. Next, I mentioned for a moment ago, an emergency fund. I always tell people to have 3 to 6 months worth of spending in an emergency fund, in a bank account or a money market account with your brokerage firm that's easily available. What happens, though, when you get a bigger emergency than that? And specifically, one of the things that we talk to people about in Israel is, well, you get a war, heaven forfend, and all of a sudden the country is overrun and overwhelmed and needs help. You said, well, I have an emergency fund for myself, but do you have an emergency fund for your country? And the fact is, I know people don't. So what we saw happen during a recent war was that people said, Doug, I want to help, but I don't have the liquidity. I don't have the money available right now to be able to help the country. But I do have appreciated stock. So what can I do? So all of a sudden, so for people who don't have a good cash flow, they don't have enough cash available, their income on a monthly basis isn't enough to give the $20 or $50 or $100,000 that they want to give to support the soldiers, they can literally donate the appreciated stock, not be hit with a huge tax bill, raise a huge amount of cash. Of course, do this within the framework of speaking to your financial advisor, but they're able to do this so that all of a sudden they can access a large amount of cash without a negative tax consequence when a real emergency hits. There was another emergency that hit a long time ago. In 2005, the Israeli government decided that they were going to give away Gush Katif, right? They were going to give away the homes of 8,000 Israelis. And all of a sudden, these people were really stuck. And I had a client, this woman, a very, very modest woman, who said, Doug, I have enough money for myself. In fact, I'm looking around to see how people are helping all of these refugees from Gush Katif, and they're helping. They give them food, and they give them bicycles, winter coats. I think what these people need is cold, hard cash. Could you arrange that for me? I said, well, you don't have cold, hard cash. She said, yeah, Doug, just why don't you sell a third of my portfolio? Is that okay? Will I be okay if I give away a third of my portfolio? So we ran through her financial plan, and we determined that she would in fact be okay if she did that. And then we met with her lawyer and her accountant and set up the portfolio in such a way that she could sell off a third of it, give away that money, and she saved the lives and the sanity, I think, of hundreds of people, which was a fantastic donation. She did it as part of the overall plan. And that's really what I want to suggest to people, is that in donating money, you can see your portfolio as a real asset that you can give. And now, given the updates and laws in Israel, you can do it in such a way that the tax benefits are really, really going to be very strong. And it's worth looking at with your accountants, with your advisor, and seeing if it is, in fact, something that you can do. If you are already working with Profile Investments and want to talk about it, so of course, feel free to be in touch with me. If you are not working with Profile and you are charitably inclined and just want to have just touch base to see if it's something that we might be able to help you with, just to review your situation, you can always set up a cross-border financial evaluation with us to see if we're the right firm to be able to help you to make this decision, as well as to help you with your U.S. investments when you live outside the U.S. Just go to profile-financial.com/call and set up a time, and let's see if we're the right place to be able to help you out to discuss this issue. I'd like to thank you very much for taking the time to listen to me today. I hope this was useful. One of the things that I'm so excited about is that people are really trying to learn about how they can optimize their portfolio, both in terms of their investments and in terms of lowering their taxes. And it means to me that if you've listened all the way to the end, that you are one of those people who really is a great charity giver. I'm so happy that I've been able to give you a little help with that, and I'm so happy that you are one of those people and that you're on the team of those people who are really trying to help the world. Thanks so much for taking the time. Looking forward to speaking with you soon.